Hello everybody, welcome back to a brand new video, and today I intend to explain the basics of the CFD side and also the invest side, and basically the basics of how to use Trading 212 all in this video. So please do watch all the way till the end because there is a lot to be learned, and if you do end up enjoying the video, please watch one of the others on the channel because I've discussed which one is potentially better or safer out of the CFD or the invest side in the past, and I will also have that at the end of the video. So let's just talk about the basics first. We have three main sides on Trading 212, but two of them are basically about investing and one of them is a stocks and shares ISA, so we'll cover that one in a different video. But for the other two sides, we have the CFD side and the invest. So if you're going to invest in stocks via Trading 212, you do need to know these two sides. So we'll start off at the invest side, being as this is mainly the more used side, and it's also a safer side. So how does this one work? So first things first, when we have purchased some stocks, we will see an account value, which is basically obviously the amount of money in our account and what it's currently worth. Now, free funds are the money or the funds that aren't invested in stocks yet or have been paid back via a dividend or something like that. So in that situation, that's basically money that you don't have invested yet, whereas a portfolio is money that has been completely invested and is not spare. So all of the money in the portfolio is money that's invested. So it's important to note that. So to purchase our first stock, is basically you just find a stock that you like. So first things first, stocks which are red for the day are negative and have gone down in value over the day. Stocks which are green have gone up in value over the day. So we're going to pick a stock that we like. Now I'm going to say this quite blatantly, just so you know, please do your research before you invest in a stock, but I'm going to pick a stock. So we've got the option to buy and sell. So sell means that we're going downwards on the stock because we have actually already purchased a stock in the past. So for the purpose of the video, we are going to purchase. So we can see here the line where it's slightly darker is the amount that we can afford to purchase, or the amount that we have available left to purchase. So we can see that there, and we are going to go for a 0.3 if we can. Okay, I can only go for a 0.1, so I'll go for a different stock just for an example. So we'll go for, let's say, Microsoft if we can. Yep, so we're going to buy this, and then we can pick the amount of shares that we want. So we can go all the way up in my instance, but perhaps that's not the case with you. So just pick a stock that you want and press buy. So you can also pick an order, price where you would like to do this, and things like that, and the amount of shares which you'd like to buy, and other kind of cool features. So this is just the basics of it, and I'm going to explain it further per side in another video. So to see the performance of the stock in the past, we can zoom out onto previous dates, and there's some previous information. So we've got company details below, which is also important to note because it gives you a little bit of background history on the stock itself and what's going on, and also how the company is performing. And we've got more information below, just some basic stuff that you'd like to know. So there you go, that's the basics on this side. Also important to note, when you go into the portfolio, you can see here, so the green is the amount of profit that you've made. This is represented in a financial number and also in a percentage. So we can go out to 1 day, see how much we've made for today. We can go out to 1 week or 1 month, or all the way out to the maximum time which we started investing, and we can see the profits there. So we can see that we are actually making a profit so far, although it's slightly dipped so far in the recent last month, I think. So there we go, that's the basics of this side. So yeah, and also at the bottom when we scroll down, we can see in different colours the amount of stocks that we've purchased and the amount of diversification in our portfolio. So obviously the numbers or the colours with the highest number of stock are larger on the graph, and the numbers in colour form with the lowest amount of stock are smaller. So we can see this here, like the pink on the very end and the purple on the other very end, which one is larger, and that basically shows us how diverse our portfolio is and how much things in it are worth. So there we go, that's the invest side explained. Now we're going to move on to CFD. So straight away we can see at the top, we can see some different things, but we can see similar things that we slightly do recognise. So we've got an account value right there, free funds, again funds that haven't yet been invested, and blocked funds, funds which are currently in an investment. So I'm going to talk about this more in my CFD video tomorrow. But there we go. So we can see here margin call. This is where your funds run out basically, and you have to apply more funds for the position to stay open. And if it goes all the way down to something like, I think it's 29% or maybe a little bit lower, positions will close, which means you will not be in the investment anymore. So we can see our green circle, and then we can see an inner circle which is purple in this instance, and this shows us what we are actually invested in. Again, it shows us the amount of diversification in our portfolio, but for us, we don't really have a very large circle because it is all basically in free funds at the minute. So that's that. Here we can see the amount of stocks that we've got and the open positions, as it's called. So these are here. If it's green, it's a profit. If it's red, it's a loss. But basically, you can see what's going on here. So maybe not a good idea to have so many positions open on this side because you can actually lose all positions. But there we go. So if we go into pending orders, we can see that we don't actually have any. But if we wanted to put one in, we could put an order on the market at a different price or a different point in the future. So there we go with that one. Anyway, when we go onto the main page, we can see some different things. We can see stocks that we can trade. We can also see things like Forex and indexes, which we can also trade. So there are more options on this side, which is a good thing. And we can also see more options that we've not seen before, such as buying and selling. So like I said, selling was only there before because we actually own some of the stock, but we can see here we can sell the item anyway without even owning it. Now I do actually own some of this item, but we can go to a random item and do the same. So we can pick a larger or a smaller position on this instance because we're allowed to go much smaller and much larger. And this is due to a process which is known as price leverage. So we can leverage more money in order to make us have a larger position size than what we could have with the other side, which is the invest side. Also, there are more options to trade, which is important to note because, you know, some things you can't actually get on the other side where you can clearly get them a lot easier here. So there we go, we can see the absolute basics of this, a lot more options along the top and things which we might not recognise. But it is important to note there are differences on this side. I've talked about this more in my differences video, but you can see here we can lose a lot more money. Now obviously smaller price fluctuations make the price go down a lot more. That's important to note because you are trading with leverage. I've talked about this in my CFD versus invest side video, but trading with leverage is higher risk for potential higher reward. So comparing both of the sides, the CFD side is often used more by people like day traders or swing traders or people that are certain the stock is going to turn a profit or whatever, whereas the invest side is usually used for more long-term investments. So that's basically the main difference between them. One's a lot safer than the other, and of course we've got the ISO, which I'll talk about in a different video. But yeah, we can just see here, you can basically have a lot more open positions, and the numbers do not move around half as much as on the other side, and that's just because it's a less stable investment than this side. So if you are willing to put money into it, that is something to note. So yeah, like I said, I intend to make a few more videos on this in the future, talking about the CFD side and the step-by-step guide to how to use that, and a step-by-step guide on directly how to use the invest side, and then basically what an ISA is. So if you enjoyed this video, please leave a like, and I'm just going to talk to you in this last section about a few of my investments. So we can invest in different things, it's important to note. I mean, I'm sure you already know this, but some investments are safer than others. At the minute, it's a bit tricky to interpret which one is better, but if you are looking through it, do remember when purchasing your first stock, we can purchase a lot of different stocks and funds, so it's important to not get confused and make sure we do our right research on this because there are so many options to pick from, you could easily pick something wrong. So please do research on that first. We can see here we've got the options for stocks, and we've also got the options for ETFs, which are usually things like funds. So you can see here equity funds, we all know, well, we don't all know this because this is basically an introduction beginner video, but we've got things like the S&P 500 fund ETF, the FTSE 100 ETF, and things like that. So there are many different things where we can generalize a whole market, similar to what we can do on the CFD side, but also again with a lot more risk because we are less likely to lose all of our funds at one time. So yeah, that is a safer way to go around that route basically. But yeah, there are many ways to do it, and I just thought I'd explain a few of the basic step-by-step things on how to purchase your first stock on Trading 212. It's been a bit of a complicated video, perhaps I'll make a simpler one after I make the other two, but I hope that you did enjoy it after all that, and I will see you in the next video. Goodbye. So just before I go, I'd like to say once again, when investing in a stock, pick a stock, do your research, and see if it's actually the right investment, because you never know, even if it looks like it's going up for the day, it could still go down tomorrow, or even in the future, in a long period of time. So it's important to think ahead when you are investing. And after all that, I will see you in the next video. I hope you did enjoy this one. I will leave a few of the other videos on screen. See you then.